Historically speaking, we're still at a good interest rate for homes. We were just spoiled by this.
Yeah.
Trust me, I was spoiled by this. All right, guys, housing is a top conversation piece. Why? Well, very simple. A year and a half ago, my fiance got a 30-year mortgage at 2.625%. That same one today is like 6.5%. That's why. This is over doubling the cost of that mortgage. Think about that. If you have a $300,000 mortgage, you went from paying $7,200 a year in interest, $300,000 mortgage, $20,000 in interest. I'm sorry. That's a huge jump, almost triple. That is definitely going to affect prices. Now, in past videos, I said, I'm not thoroughly convinced that because that housing prices will go down. I have been wrong. My reasoning for it was inflation. I'm renovating a house right now. Mo, you've renovated your house. Mm-hmm. How have costs gone?
Skyrocketed.
I
mean, I look at what I renovated my first house for, and I wouldn't even be in that same ballpark anymore.
Of course not.
And that was in 2019.
I'm literally getting quotes now where I created a budget, I increased the budget to factor in inflation, and I'm still coming in at higher prices. Yeah. So that's why I thought housing prices wouldn't go down. Because if you have a house that you bought for $300,000 3 years ago, and the house next door is exactly the same and is being built now, and it costs $450,000 to build that exact same house, how's your house worth $300,000 anymore? Yeah. It's not. But at the end of the day, housing demand has cooled because of these interest rates.
Mm-hmm. Yeah, national average right now, as of Friday, is sitting at 6.09%.
Oh, that's pretty good.
Yeah.
Now, all right, so let's see how much mortgage applications have changed. This is a chart going back to 1992 or 3 on U.S. mortgage originations in total dollars. 03 was the peak at 1.22 before this bubble. Came crashing down, of course. Went sky high because of interest rates dropping big time. And look at this big drop. Look at that big drop. Now, mortgages are down. The interest rates are down on mortgages in the last month or 2 or 3 months or whatever it is. So that's good, even though rates have gone higher. But look at this massive drop. Yeah, I read somewhere like 2 months ago, 85% of mortgages cannot be refinanced because just the interest rates are lower than the current rate.
Really?
Refinance is probably driving a ton of this.
Everybody was refinancing.
What can you do about it?
Yeah.
Now, the other thing I don't like about this chart is it does total dollars. And back here, the average cost of a home was how much less than here. Less, right. So it's a lot different. I get that. I do understand that completely. But the same point is that should also worry you about why was this stuff so normal here? Well, actually, this wasn't very normal, 08. And then all of a sudden just went, boop, magnitudes higher. Mm-hmm. Why? Because interest rates were lower. Now, does that mean, look at 1975 to 1984. For the next minute, I'm going to explain to you our software at everythingmoney.com and how you can use it to retire with more money than you thought possible. Do you get anxious every single time the market dips? Do you feel like maybe you're behind on your savings? Is it ever a worry that you may not have enough money to retire? If you've answered yes to any of these questions, then our software is absolutely perfect for you. With these easy-to-use tools and our community with thousands of other like-minded investors in there, you can use all of this to have better peace of mind and to understand why you are making the decisions you're making, because it's more about the emotion and temperament than it is about the numbers. And these tools, especially this community, will help you realize that and make better decisions going forward. You will absolutely be able to understand financial statements and impress your friends who still waste their money buying stocks based on their emotions and other hype people out there. So for a little over $1 per day, less than a cup of coffee, eliminate that fear from your life of worrying about your future financial state and your retirement savings, and try our software risk-free for 30 days. If you don't like it, email us, money back guarantee, no questions asked. Go to everythingmoney.com, sign up now, and change your financial future starting today. Mo, what do you have? What were you going to show?
This is just, this isn't the best but it shows, you can see right here where the big spikes were. And these are mortgage applications that were coming in. You can see them ebbing and flowing throughout the years. And you see the big spikes were during 2020, big skyrocket, big drop when everybody got worried. And then they continue to climb. And here you had that big peak, and then all of a sudden interest rates coming up. Now we're falling. Mortgage rates in the last week, this is the data that comes out every week, they sank 9% in the last week of January.
applications.
So you can see that people are starting to not go after these mortgages.
Well,
but people are still going, because we have a friend that's in the industry and he's like, hey, some kid comes in 27, 25 years old.
Buying his first house.
They look at 6% and they go, okay, cool.
Yeah, they didn't know what. By the way, 6% over a long run is actually pretty decent.
Really not bad. It's pretty normal.
Actually, there's got to be some. Let's look at that.
Because we look at this now and say, oh, it's not 2.5%, 3%. That sucks. But if you look at the long term, I wonder what the average is over a long period of time.
Well, that's what I'm going to do right now.
Okay, cool.
So I'm going to pull up the St. Louis Fed. This is going back to 1971, 30-year fixed mortgage. Going back to 1971, guys. Now, granted, the hard part is this was a huge inflationary time. But the thing I like about this is in 1975, the average rate was 9% on a mortgage, and the average house was $32,000 in value. In 1985, interest rates were 13.5%, and the average home was $81,600. So you still saw an increase, even though rates went up 50%.
Right.
We had, why? High inflation. Now, there are other factors in there. We were also in a bad economy. So part of that was in 85, the economy was getting a lot better. We are kind of coming off we're on a peak of an economy. I mean, just Janet Yellen said, how can you actually have a recession or a bad economy when unemployment's 3.4%? And I literally heard that like this. Well, that's the case, then why did we have a recession in 2000? Because in 1999, unemployment rate was 3.6 or 3.7%.
If that's the only metric we're looking at, then we're good.
Unemployment is a lagging indicator, which means it changes after the fact. Why are now people, if the economy is so strong, why are these tech companies all laying people off? And I'm not trying to be a fudster where I'm trying to sit there and put fear, uncertainty, and doubt. I'm just looking at when I hear Janet Yellen literally say, how can we have a recession now or in the near future when unemployment's so low? Because how can you get in a fight with your husband after you just made love and you told him you loved him so much? It happens because things aren't always great and things aren't always bad. If that's the same argument, then when unemployment was 10.5%, how could we see the economy getting better when unemployment's 10.5%? That makes no. In fact, I literally heard that, and if somebody told me who said that, I would say Kathy Wood. Right?
Maybe. Janet Yellen could be her sister.
Well, she was Fed chair. So, historically speaking, we're still at a good interest rate for homes. We were just spoiled by this.
Yeah.
Trust me, I was spoiled by this. My fiance literally got this mortgage right here. She literally has 2.625. Complete dumb luck. I always tell her, we are never, ever getting into your house. We're going to rent it out for the rest of the time because we're never going to be able to replace that mortgage. So there's no reason to take the cash. We're not going to be able to beat that. That's crazy.
Sure.
So where's housing going? We have no idea.
Yeah.
Are there headwinds? Absolutely. But some of the positives are inflation helps housing prices. Inflation absolutely helps housing prices. It helps incomes go up, which means people spend more on houses. It helps the cost of the house go up, which means builders won't build a cheap house for you. They have to make money.
Right.
So you look at all these dynamics and say, okay, what's really going to happen? Listen, I'm glad interest rates are up. To me, that stabilizes things. 0% interest or very low housing causes too much euphoria in the market.
It causes these graphs that we're seeing that are going straight like this.
But they also cause, when they go up, straight back down. Exactly. So if you like what we say, and you sit there and say, hey, these guys make a little bit of sense, remember, I hope you noticed, there are no YouTube ads in this video. We're doing this to focus on our content and our software. So if you like this, please subscribe. We're going to provide more and more information out there. We've done over 2,000 videos. We do 20 or 30 a week. Please subscribe to the channel. Thank you very much for your time.